Gold is finally starting to make a move, and in this video we're going to break down what led to this potential breakout here today and whether or not this rally can sustain itself. Again, this is a nice move today in terms of the daily range. At the time of recording, we're just about 1% from the low of the day to this current high of day. But again, by the time you see this video, things could look very different. But in this video, I'm going to be breaking down my current position on gold, my thought process on this going forward, and why gold had a little bit of a pop today. Let's jump in. So first off, I wanted to talk just a little bit about the retail sales numbers that came out this morning. We did have the retail sales month-over-month number report. Better, well, not better, worse than expected, lower than anticipated. And you may ask, why does this move gold specifically so much? Well, it actually makes quite a bit of sense once you think about it. Retail sales refers to, again, the sales volume, the action going on, the activity going on in the retail spending kind of world. If that is really good, that is a good signal of a strong economy. If that is poor or comes out worse than expected, like it did today, that's not so hot for the economy and shows the contrary, shows the consumer may be trying to save a little bit of money and maybe feeling the effects of all this inflation that we've been talking about so much. Now, we came out 0.1%. We were expecting 0.3% on a month-over-month basis for retail sales. Not only that, we also saw the revision to the previous month's data down from 0% to minus 0.2%. That's a pretty substantial slowdown in retail spending. The consumer seems to be feeling the pinch right now, and that is made apparent by this data here this morning. Now, on top of that, we got the core retail sales number, which also missed expectations, was expected to be 0.2. We got minus 0.1% and some revisions lower on the previous data. Long story short, the retail data this morning was a little bit disappointing to the market. And why is that positive for gold? Well, the reason that gold popped on this data was because, if you think about it, the economy starting to show signs of cracking usually will have something to do with the consumer feeling the pinch and not able to go spend as much money as they previously did. And that pinch makes people a little bit worrisome about the economy. And they say, well, you know what? Maybe I need to go into an alternative investment like gold to, safe harbor some of my money. Not only that, this also increases the probabilities of a rate cut this year. Now, how do I know that? Well, it's pretty simple. Pull up the 2-year government treasury bond yield, and we can see that it dropped off the face of the earth at 8:30 this morning because, again, the consumer showing signs of slowing down increases the probability that the Fed will say, hey, we need to stimulate this economy to keep things running strong. So the market, again, can continue to kind of progress. The economy can do well. So rates fell this morning, and that is a very positive thing in most scenarios for gold because, again, rate cuts mean a weaker dollar. Weaker dollar means stronger gold. You can see how all of this stuff is kind of working into one big circle and why fundamentalists typically don't stick to just one asset. They typically trade a wide basket is because they all kind of communicate to one another. Speaking of wide baskets, let's take a moment to talk a little bit about the stock market. Stock market, we take a look at the 4-hour chart, is continuing its upward trend. Seems like nothing can stop this rally. Same thing with the NASDAQ. I mean, these things are still green on the day, even though, retail sales does kind of coming out poor is not great for stocks. Think about from a company's perspective, if the consumer is starting to pull back, that's not great for company earnings. But the market is saying, well, rate cuts are great, so we'll keep pushing higher. And this trend has been dominant to the upside recently. Here's the daily chart on the S&P 500. Just a really strong chart to the upside. Same thing with the NASDAQ, just a lot of green here. While I do think it's due for a pullback, I've been saying that for some time and I'm not holding my breath. If it does pull back, I'm interested in long setups, but for now, I'm on the sidelines. Also, I wanted to take a moment to shout out today's video sponsor, Vantage Markets. If you haven't checked out Vantage before, it is a great brokerage for traders outside of the US who are looking to trade things like indices and stocks, CFDs, and so much more. They offer a wide list of different CFDs that you can trade. So if you're not already trading with Vantage and you'd like to check them out, there's also a sign-up referral bonus down below in the description of this video. So check out Vantage, see if they're right for you. Again, you can trade everything from FX to commodities to index CFDs, and you can even trade something that I personally like to trade a lot, which is the Russell 2000 index using US 2000 on their platform. So really cool. They offer a very wide range, and if you're outside of the US, it might be a broker that is suitable for you. So check them out, do your own due diligence, and with that said, back to the video. So with this retail sales number, we also saw the dollar give back a little bit of its recent gains. In fact, the long wicks on top here are a little bit concerning for dollar bullishness in my view, but we are retesting a level of support after retesting it. I wouldn't be surprised if we see a little bit of a reaction from the bulls, although we already kind of have seen this. I'm very curious. I'd say this, if you're looking at the dollar, my opinion would be, basically, can we break and close underneath, showing that we're coming back into this consolidation period, or are we going to break through the highs? If you get a close above, there's a good chance the dollar index continues its rally, in my opinion, up to that 106.4 level. So dollar index is kind of in no man's land. Yes, we're pulling back, but I don't think we're in like a solid uptrend with a ton of data to support it. I would just be kind of surprised if we, if we just shot right up off this, but it is possible. And again, the dollar has had a little bit of an impressive rally recently, but in my view, we're still kind of just chopping around until further notice, until we get something more decisive, like a hot CPI print or, rate cut expectations really squashed, something like that. And today's number does not help with that story. In fact, today's number suggests that maybe inflation will continue coming down. Maybe the rate cuts are going to come sooner because, again, the consumer is showing signs of slowing down, and consumer spending can lead to more inflation, or less consumer spending can lead to less inflation. That's the key story today. I mentioned earlier that yields are on the come down here recently, which is really great for my TLT position. Now, TLT is a bond ETF. And remember that if you're long bonds, you're betting that the yield will go down. And if you're short bonds, you're betting that the yields will go up. I'm personally more in the former camp, thinking that, again, yields can continue to come down if the economy continues to show some signs of cooling off. As long as that cool off story occurs, I'm still willing to stay long my TLT position. I have 1,000 shares at 91.93. Now, in terms of this position, you may say, well, Nick, are you going to take some profits off this? Well, for me, I've mentioned this before, but if we get a scream to the upside, if we see TLT really take off, I may sell covered calls and perhaps exit the trade that way. But this is more of a position trade for me based on fundamentals. I like the story. I like the price action as well, and I'm going to stay long TLT. I mentioned gold earlier as well. As long as we continue to hold this support level, I will stay long on gold. My stop loss is just below this level here. In fact, let me give you a number here, right around the 22.84 level. If we see that level breached, then I'm going to go ahead and stop out of my position. Otherwise, I'll stay long gold. Another position I have on inside of the VIP room is the USD CHF short trade that I took a couple days back, and this one is really swinging down. I actually just trailed my stop loss further into profit here today inside of the VIP room. I'll show you what that looks like. So again, like I said, I took this short trade a couple days back and have been kind of following up with it. And this morning I went ahead and trailed stops into profit, floating around 81 pips at that time. Now I've got a stop loss in about 37 pips in profit. So nice little move on the Forex side. On the commodity side, like I said, I'm continuing to hold gold. I've added recently to my position. On the index side, I don't have any trades recently here. To close for a small profit on the Russell, and position trades, again, continuing to hold my TLT trade as I mentioned earlier. By the way, we also share Frank's trades in here and Ivan's trades. So if you're not already in the VIP room, I got something special for you. We are currently doing 50% off the VIP room if you use the promo code YTVIP down below in the description. However, the first link in the description has something special for you. If you made it this far in the video, I've actually got even more of a discount for you. You can currently get 55% off if you click the first link in the description and chat with someone on our staff. By sending them a direct message, you can ask a few questions about the group, see if it's right for you, and come join us in the action if you'd like to trade alongside myself and Frank. We also do coaching webinars. There's a live chat room where you can meet other people who are, fans of the channel and watching our content, and so much more. So if you're not already in the group, take advantage. Again, that is the biggest discount that we do all year long on the VIP memberships. So don't miss it. Take advantage, and I hope to meet some of you guys in there soon. Taking a look at oil, we are up against a level of resistance, and watching this one will be very interesting because if this thing can kind of break out and continue higher, that could put some pressure on the inflation story and on the stock market side of things. So I'm going to keep a close eye on oil. It does seem like we've started a little bit of a breakout here, but I'd be curious to see if we can actually break this 80 level and start getting back into the 80s, or if this is just going to roll over and kind of go sideways for now. But we'll keep an eye on oil. Bitcoin also broke a key level of support, which we can actually probably now outline as supply or resistance. You can see here, again, big support at that 67,500 level, which was holding for some time. If we extend this level out, It was kind of the line in the sand for the crypto bulls. And with that falling, we see a lot of altcoins as well as Bitcoin itself really losing a lot of value here recently. This has more room to the downside in my opinion, but longer term, I am watching for a possibility of picking up some Bitcoin just to add to the portfolio. It's a little bit of a diversifying thing, but also just because I think that, you know, it has the potential to really outperform if it is going to stay in the world, and if it's not, it'll go to zero. But the risk reward still is good there. I'd rather risk 100% for a potential to make like 500% or 1,000% rather than, you know, anything else. I think that for me with crypto, I am a bull long term, but I would like to pick it up at a good discount and you know, kind of play the patience game on the longer term. More of a position trade, not really a momentum trade. With that said, guys, thank you very much for tuning into this video. And remember, don't miss out on the VIP discount sale. Again, first link in the description down below. Thank you very much for watching today's video. We'll see you next time. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.